The market is having a tough time, and I won't lie, it feels horrible. My portfolio is down by over 5% in the past month. That's over 1,500 wiped out. And it isn't just me, the entire market is getting wrecked. The S&P 500 was down by 1.8% on Monday the 3rd of March. Tech stocks particularly are leading the freefall, as the tech-heavy Nasdaq index was down by 2.2% in just one day too. The reason for all this seems to be Trump's new tariffs. He slapped 25% tariffs on both Canada and Mexico, whilst tariffs on Chinese goods jumped from 10% to 20%. And to make it worse, Trump has now suspended military aid to Ukraine, adding even more uncertainty to the global economy. The markets have done what you'd expect when the world's largest economy declares economic war on its two biggest trading partners. The markets have spiraled and they've crashed. It's ugly, it's painful, and it's probably not over yet. But despite all of this, I'm not panicking. In fact, I'm doing the opposite. I'm still buying. And in this video, I'm going to explain why. Right now, everything feels uncertain. The markets are swinging wildly, and the news headlines are all doom and gloom. However, here's the thing. Short-term volatility has historically been normal, and this is the biggest reason why I'm staying calm. Markets don't tend to move in straight lines. Historically, they've crashed, then recovered, and then marched on higher over the long term. And although some may suggest that this crash is different, it's not the first time that the markets have been hit by political chaos, and it likely won't be the last. For example, back in 2018, Trump launched a trade war with China. The US slapped tariffs on Chinese exports, and China retaliated with its own tariffs. As a result of this, the S&P 500 dropped by nearly 20% in a matter of weeks, as investors panicked with many of the same concerns as of today about rising costs and global economic uncertainty. At the time, tech stocks got crushed, manufacturers struggled, and fear took over. But here's what happened next. Despite all the panic, the market rebounded, and by mid-2019, the S&P 500 had fully recovered and hit new all-time highs. This is historically how the markets have worked. Short-term, the markets are chaotic, but long-term, historically, the markets adjust, move on, and go up. And that's why I'm sticking to my plan, no matter how bad things look today. So what is my plan? I invest 1,500 every month into a set of 4 ETFs, and I'll keep doing this no matter what happens with the markets. I use a dollar cost averaging approach, meaning I should get the average market price over the long term. Don't get me wrong, I'd love to be able to time the market in buying low and selling high. But this is extremely difficult, even for experienced investors, and it poses a big risk that I could miss out on the market's best days. And you don't want to miss out on the market's best days, as this can make a huge difference to performance. For example, if you missed the S&P 500's 10 best days over the past 30 years, your returns would have been cut in half. So for this reason, my approach is to keep buying, to remain invested, and to ignore the noise. I actually consider this dip as an opportunity. Right now, many investors are fearful, and that's exactly when I want to be buying. Warren Buffett famously said, "Be greedy when others are fearful," and there's good reason why he said this. The S&P 500 has fallen significantly, and historically it bounces back after these corrections. Also, valuations for some of the world's biggest companies are now cooling off, which means they're cheaper. And if tariffs cause more panic, we could see even bigger discounts. So for these reasons, I'm actually considering investing more at the moment to take advantage of potential discounts. In summary, what's happening at the moment isn't fun to watch. Trust me, I don't like seeing my portfolio in the red. But history tells me that staying the course tends to do well, and I'm playing the long game. Historically, markets have recovered after crashes, and historically, panic selling doesn't tend to do well. So I'm going to continue with my plan of investing 1,500 every month into my portfolio, whether the market crashes still or continues to crash, or whether the market has a huge recovery. Hopefully, either way, what we're seeing at the moment is going to be a tiny blip in the long-term chart of an otherwise upward journey. Let me know what you're doing at the moment, whether you're buying more, holding firm, or selling. Let me know in the comments. Thanks for watching.